Welcome everybody to Accounting Explained. It is great to see you again. In this series of educational videos, you will watch some unique but easy to understand explanations of both basic and more difficult accounting concepts. And the main topic in this lesson is still debits and credits. We managed to explain already in part 1 the basic accounting equation, meaning that the sum of assets, liabilities and equity is always equal to 0. In part 2 we saw that we always have to make a double change in the equation, and in the language of accounting such a double change is called a double entry. And in part 3 we finally revealed the mysterious substance of debits and credits. If you have not watched parts 1, 2 or 3, please do so in order not to miss anything important. And now let's finalize this series of lessons with one more significant accounting term, the balance sheet, in part 4. Interestingly enough, the balance sheet, which is an ultimate result of the accounting records, doesn't use the terms of debits and credits. It is rather expressed in normal human descriptive language. Anyway, you will see. Let's first remind ourselves about the fundamental substance of debits and credits as we defined it in part 3. What exactly does it mean that debits and credits are just some other names for positive and negative numbers in accounting? We will break our answer down into two parts. Firstly, we already know that debits and credits are representing whether a balance, i.e. value at a certain moment, is positive or negative. Debits are used to express the positive values of assets, while credits are primarily associated with the negative values of equity and liabilities. Secondly, in addition to that, the terms debits and credits are also used to reflect the movement in assets, liabilities and equity. And movement means change during a period of time. And this is done in the same way we are used to add up positive and negative numbers in algebra. Debit is a plus, therefore it increases a positive asset, or it decreases a negative liability or equity. Credit, on the other hand, is a minus, therefore it increases the negative liability or equity, or it decreases a positive asset. Let's now go back to the Johnny's case study. The table that you see on the screen is a summary of 5 financial events that happened to John during the past month. We discussed those events in previous parts of this video lesson series, and here in part 4 we are going to finally conclude on the whole case study. First of all, notice all assets and liabilities and their movement are expressed with pluses and minuses, as we did it in part 2. Knowing that the accounting language does not use the wording pluses and minuses, and since the times of Luca Pacioli it rather uses the terminology of debits and credits instead, we have just to replace the pluses with a debit and minuses with a credit. Let me repeat that statement. Debits and credits are nothing special, and no matter what other accountants tell you, they are just made-up names for positive and negative numbers in accounting. By the way, in part 3 we also practice how to perform mathematical operations with debits and credits. In the same way, we are used to add up positive and negative numbers in algebra. And now, looking at our accounting records full of debits and credits, let's have a brief look at how would an accountant write down double entries relating to John's 5 financial events. The first event was earning a salary. John's cash increased by 3,000, and cash is an asset which goes up through a debit movement. And also, as John has earned the money, he has become richer, so his equity has increased by 3,000 as well. But because equity is initially a negative number, or a credit, it increases through a credit movement as well. The accountant would write the following double entry here. Debit cash, credit equity, 3,000. What does this mean? It means that the accountant would set up special accounts, one to record all movements of cash and another account to record all movements of equity. In other words, the double entry means increase an asset, cash, with a debit and also increase equity with a credit, both by 3,000. The second event was investment in shares. So Johnny's cash has decreased by 5,000 and this is a minus or credit 5. The cash was invested into shares which increased by the same 5,000 and this is a plus or debit 5. The accountant would write the following double entry. Debit shares, credit cash, 5,000. In this case, both accounts, cash and shares, are asset accounts, so debit means an increase and credit means a decrease. The third event was credit card spending. So, as John has charged 1,000 to his credit card debt has increased by 1,000. Because credit card debt is a liability, i.e. a negative number, and we make negative numbers bigger by adding extra negative numbers to them, so the increase of credit card debt is expressed as a minus or credit 1. And also, after spending the money, John has become financially poorer. His equity has decreased by 1,000. Again, because equity is a negative number initially, we make negative numbers smaller by adding positive numbers to them. So the decrease of equity is expressed as a plus or debit 1. And the accountant would write a following double entry here. Debit equity, credit card debt, 1,000. Because equity and liability accounts are involved here, for both of them debit means a decrease and credit means an increase. The event number 4 was revaluation of shares. What has happened here? The value of Johnny's share portfolio has increased by 10,000. Shares are an asset and increasing an asset is a plus or debit 10. And also because John has become richer, his equity has also increased by 10,000. Because equity is a negative number, we make negative numbers bigger by adding extra negative numbers to them, so the increase of equity is a minus or credit 10. The accountant would write the following double entry in this case. Debit shares, credit equity, 10,000. Both movements mean an increase here. Debit is increasing the asset and credit is increasing the equity. And finally, the event number 5 was repayment of credit card debt. Johnny has used his own cash, so the 4,000 of cash has been spent, that is a minus or credit 4. On the other hand, John's credit card debt, which is a liability, i.e. a negative number, has decreased by 4,000, and we decrease negative numbers by adding positive numbers to them. It is a plus or debit 4. The accountant would write a double entry, debit credit card debt, credit cash, 4,000, which means decrease of a liability and also decrease of an asset. And the almost final point to make. Although the debits and credits are easy, but if we spoke to an average person using those terms, it would just sound too scientific. Therefore, we should better switch from the accounting language of debits and credits back to the normal human language. People have basic understanding of what is an asset or what is a liability. So there is no need to express their values with debits or credits or even with signs of plus and minus. If we put all John's assets and liabilities from our case study about 5 financial events on a sheet of paper without their number signs, it may look as you can see on the screen. If we say that John has a credit card debt of 2000, we don't have to specify that it is actually minus or a credit 2000. Therefore, when we present the outcome from accounting records, we simply get rid of number signs, we get rid of debits and credits, and we present the numbers with just proper descriptions, as you can see on the screen. We also know that we can sum up the detailed numbers and calculate, for instance, the total assets, 220 plus 85 plus 4 equals to 309,000. Then total liabilities, 155 plus 2 equals 257,000. And the difference between them, i.e. 309 minus 157 is 152,000. And this would be the equity. Let's also sum up the liabilities and equity. 157 plus 152 equals 309. And we can see that the total assets are equal to the sum of liabilities and equity. The financial statement or the financial report that we have put together for John is called the balance sheet. As you can see, the name is very descriptive. The balance sheet is a sheet of paper where assets are balanced with equity and liabilities. Alternatively, it is called the statement of financial position because it is expressing the financial position of John. How much and which assets does he own? How much liabilities or debt does he owe? And finally, how much is his equity or his financial wealth? And now we have made almost the entire journey through the topic of mysterious debits and credits, and it is the time to summarize. And the way we are going to summarize, we will connect the dots and make links between the 4 parts of these video lessons that we have covered. So let's do it! Do you remember the basic accounting equation from part 1? Let's recap. Assets plus equity plus liabilities equal to 0. For John's financial situation at the end of the month, we get the equation with numbers 309,000 assets minus 152,000 equity minus 157,000 liabilities equals to 0. Assets are presented with a plus and liabilities and equity with a minus. In part 2, we then emphasize that the only way to keep the accounting equation balanced is to make a double change or a double entry. The double entry essentially means changing the equation with 1 plus and 1 minus, so it is always balanced. Then in part 3, we have learned that in the language of accounting, we do not say plus or minus. But accounting historically uses the terms debits and credits. The debit stands for a plus and credit means a minus. No matter what other accountants tell you, this is the unique and simple substance of debits and credits. Now, if we replace in our accounting equation the pluses with debits and minuses with credits, we get a variation of the basic accounting equation. All debits should equal to all credits. In our example, the sum of all debits is 309, which is also the sum of all credits. And finally, although debits and credits are not difficult to understand, but we do not have to mention them when we talk about assets, liabilities, and equity in human language. Therefore, we can come up with yet another variation of the accounting equation, which doesn't have any pluses or minuses, and it doesn't have any debits or credits as well. And it is assets equal to equity plus liabilities. We put the positive assets on the left hand side and negative liabilities and equity on the right, but without the minus. In John's example with numbers, assets 309,000 equal to equity 152,000 plus liabilities 157,000. And this equation has a special name. It is called the balance sheet equation. And we already know the balance sheet is indeed just a sheet of paper where assets are balanced with equity and liabilities. And so, we are now done with the entire 4-part video lesson series dedicated to the fundamental accounting basics. My goal was to demystify the beast called debits and credits, and that has hopefully been achieved. If you, however, need to go back to any of the previous lessons, you are more than welcome. Otherwise, you have done a great job, and I do hope you had a bit of fun, and most importantly, I hope that you have learned something. It will be my pleasure to see you around watching any other video lessons of the Accounting Explained channel.